Hi, everybody. It's Pat at Caliber Home Loans. Hope you're having a great afternoon. I want to take a minute to kind of share with you the news that came through the Feds today with the announcement of a quarter point drop in rates. So, what does that really mean for mortgage backed securities? Well, it always depended upon the language within the speech. And we were looking for language that was more concerning a recession, like they had stated back in July, and more concerns about the tariffs with China to be more embodied in the speech, and it really wasn't any news that we hadn't heard before. And also, we were very concerned if there was going to be news in there about inflation heating up. Right now, the Feds are tracking an index that has it around a 2% goal, and we were at about 1.8% inflation for this month, and it was about 1.7 in the month of July. So, although the inflationary numbers were up just a tad bit, it didn't concern the Feds. And fortunately, it didn't spook the market, because if there was some heavy language in there regarding inflation, it would have had the opposite effect for mortgage-backed securities. So there's not always a correlation when they do drop the short-term rates than how it affects the long-term rates, which are mortgage-backed securities. So let me show you a quick chart here and let you take a look at where the market finished at. So basically, we finished down at 6 basis points. It's really considered a flat day, but I want to go back to this chart here. This is known as Japanese candlesticks, and kind of show you what happened over the last week and a half. So if we go back to September 3rd or 4th, this is the best day that we saw on the market. This is when 30-year money was around 3.5% at no cost. And then we started getting some negative data out. And last Friday was really a horrible day on the market. This was a 63 basis point drop, which is huge. If we have a 20-point swing in any given day, that's considered a big day. But this was 63, about 3 times of what we normally see in a given bad day or good day. So rates went from 3.5 to up to about 4%. It had a little tiny recovery the last day or two, but not much at all. And today we were hoping we'd get a nice bounce with the speech and the drop, but we didn't. It turned out flat. So what that means is the marketplace is digesting this news, didn't take anything as totally surprising one way or another. Now, 10-year treasuries, which influence mortgage-backed securities, we're at 1.8 as a reference point up here. And back on the 6th, if you were to go back and look at a chart, we were about 1.396, 1.4. And that's where mortgage-backed securities were at their lowest. So I had a lot of clients that were looking to refinance. A lot of them took our advice and went ahead and locked in at 3.5, 3.6. And a lot of them thought the rates were actually going to go lower, but we were actually in an inverted curve situation where the 2-year treasury were paying more than the 10-year. So rates weren't going as low as logic would normally allow them to follow those type of trends. And we bottomed out and we bounced up high. So a lot of clients missed the bottom. That can happen, and it happened very quickly, literally over a 3 or 4 day period of last week. So the question is, where are rates going to go? It really depends on how fast they can resolve this issue with China and the tariffs. I know that Trump has delayed increasing tariffs by 2 weeks as a suggestion of goodwill, because they are going to be visiting, the Chinese delegation that is visiting here in October. The closer we get to a settlement on the tariffs, the closer we are getting to rates actually going back up. Just keep in mind, the market moves on fear. The more fear in the market, the better it is for interest rates. The less fear in the market, the worse it is for mortgage-backed securities, because people just shift out of bonds and go into other indexes. So that's a little insight on what happened today on the market. Rates did drop by a quarter point. That is for short-term lending rates for your credit cards, HELOCs, car loans, things of that nature. But it did not affect long-term rates, mortgage-backed securities, in the way that we had hoped, but at least it didn't go negative. If anybody has any questions regarding rates, give me a call, 503-539-2974. Thanks for listening to this message. I hope you had a great day. Bye.